welcome, and thank you for joining us for our latest session of Ask the Experts. I'm Laura.Gilsdorf, Realtor with Madison and Company, based out of Evergreen, Colorado, but I service the entire Front Range. And this is LeAnne.
Hi, I'm lmerciez with Universal Lending, a mortgage banker, and I service Colorado, Arizona, and soon to be Texas.
Cool. And so today we're going to dive into the different types of mortgages that are available to buyers right now and the pros and cons, as well as some negotiation strategies for buyers and sellers to be aware of before they get to the negotiation phase. So without further ado, I will let LeAnne kick us off.
All right, I will keep this short because there's a lot that goes into each loan program. And I think I'd like to start off with the two main ones that we often hear about, and that's FHA and conventional financing. One's not better than the other. It's really who fits in the box. So for a conventional, we can bring as little as 3% down, and there are programs that allow you to bring 1% down. And anything lower than 20% down, you do have mortgage insurance. With a conventional buyer, typically, someone with a 720 credit score, you can go below 700, but usually 720 is really where you want to be for a conventional loan program. So if you have a lower credit score, then we like to look at an FHA mortgage. And FHA mortgage still has mortgage insurance, just like a conventional loan. The minimum is 3.5% down. So you can get into a house, with 3% down. And the biggest difference is you have upfront mortgage insurance, which is rolled into the loan, so you actually aren't paying it. And then you have monthly mortgage insurance as well. The two biggest difference with the mortgage insurance between the conventional and FHA is just a percentage based on how much you're bringing down, where conventional is based on your loan to value as well as your credit score. So they're both very good options. It's just good to talk to a lender to see what box you fit into. Some other good programs that I love, VA loans. VA loans are a 100% financing, so you don't have to have any down payment and you don't have mortgage insurance. So I really love VA. The only downfall of VA is they tend to be a little bit more pricey as far as your appraisal goes. The appraisal is a little bit more, usually, depending on the area, it's usually about a couple $100 more than a conventional and FHA. But overall, I love VA loans and what they offer people who've served our country. We also have USDA loans. Those are also can do 100% financing, and those are more for rural properties. And we can put in this link if the property you're looking at qualifies for USDA financing. So you can look it up, and while you're searching on, for all your properties, and look and see, can we do USDA for this property?
Awesome. Sounds like we have a lot of variety available.
Yeah, a lot of variety. And those are just four main ones. So we have a lot of different loan programs that we can offer that we consider non-QM for investors that don't actually fit into those four boxes. We have loans for people that just are moving to the United States. We have loans for people that only have bank statements that can't qualify. Maybe they're self-employed and their taxes are very tricky. But they have a ton of assets. So we have loans for those type of borrowers. So we have loan types for essentially everyone. It's just talking to someone and figuring out where you fit into, what box you fit into, and what loan program's right for you.
All right, cool. And in terms of pros and cons, are there any risk factors? And, you know, I'm going to get into negotiations here for buyers and sellers. And so this is one thing that can be really useful to know in negotiations, but any risk factors with any of those loans that buyers and sellers should know about, or maybe it's not even risk factors, but just aspects of the loans that they might want to be aware of?
Yeah, I mean, that's a good question. For FHA and VA, the appraisal tends to be a little bit more strict. They look at health and safety more than a conventional loan does. But I hate even bringing that up because it's not all the time that happens. So it's also important for a listing agent when they're looking at a property to make sure that when they're putting in you know, what type of financing is available for this property, that they look and see, okay, is this going to qualify for an FHA or a VA loan?
For sure. For sure. Yeah, I mean, and that's definitely one thing, is not just making sure that you're with a good lender that knows all of these products and can get you the best product, but partnering with a real estate professional as well that knows the loans and invests time in being educated on the loans as well, so that when you're out looking, you know the ins and outs of that particular structure and what you need to look for when you're looking for a house. So
yeah, absolutely. And it really comes down to your credit. It's going to come down to how much money you have. You know, if there's down payment assistance programs out there, what down payment assistance programs we can put with the FHA or conventional or VA or USDA loan. So there's a lot of different things that we can look at to see what is best for you.
awesome.
I don't think there's a pro or a con for any of them. They all just have their different feelers on whether or not it's good for you.
Exactly.
I also like to bring up for both FHA and VA, if you are purchasing a condo, the condo does have to be approved by FHA or VA. And we can also include that link. So you can search and see what condos are approved for FHA and VA financing.
Awesome. Well, thanks, LeAnne. So with that, I'll just dive into the negotiation piece. And the thing is about negotiations and strategies, if you will, is there's no one size fits all strategy for every buyer or for every seller across the board. It's really looking at the uniqueness of the situation for you as a buyer or a seller, and whoever your partnering buyer or seller is in your transaction, as well as the details of your house or your lot or your condo or whatever it is that is the subject in the transaction. So the thing to know first and foremost, I think when it comes to negotiations, is real estate, no matter how much you try to not make it be an emotional process, tends to be a very emotional process. It doesn't matter if it's your first time home, if it's your second home, if it's, a vacation rental, if it's an investment property. It's really difficult for buyers and sellers to separate all the other life aspects that go into that negotiation. So one of the best things you can do as a strategy is to have, lender and real estate partners who've really got your back and understand the terms of what you're willing to do. So not only is it having that person that's going to have your back, but looking at what are my bottom lines? And with those bottom lines, knowing where am I willing to kind of accommodate or make some sacrifices, if you will, because the real estate agent on your side is your fiduciary and will always look out for your best financial interest. But sometimes your best financial interest includes some sacrifices that you're going to have to make. And so I encourage everybody from a strategy perspective to really keep that in mind, that we're always looking at best case scenario and how to have you get it all your way, but every once in a while we have to be the clear sounding board to say, okay, yes, this is all your way, but in order to get to the overall outcome, we might need to give here or take there, and so on and so forth. So having an objective party is really, really useful. Establishing your priorities is essential. Being prepared and understanding the market would be the other thing, you know, so a market like we had a year ago when everything was super crazy, negotiations are looking completely different then versus where they are now. So if you were to go into the market as a seller today, expecting negotiations to be what they were a year ago, you're probably going to be sorely disappointed because we're not getting 20, 30, 40, 100 over asking in most circumstances. And sellers are actually coming back and doing some fixes and inspections and things like that, where they might not have had to do that a year ago. So working with your real estate partners to stay on top of where the market is and what's trending and what's happening between buyers and sellers is also really going to strengthen any strategy that you come up with. And so all in all, it's knowing the market, having somebody who's going to have your back. If you're a seller, knowing the different types of loans that are out there is going to be really useful too as you're reviewing those offers, and knowing what's going to be the best fit for you and for the property that you're selling. And just overall, more preparation ahead of the sale, the better. And you can get that done with your own research or with a trusted real estate advisor. So that's what I've got on negotiation strategies for buyers and sellers. Anything from you on that, LeAnne?
No, but I did have a question come in on that, and they asked, is it important before you list your house to have an inspection done, or should you wait?
My typical advice is to wait for the inspection unless you have some glaring obvious reason where it might be worthwhile. So let's say, for instance, you're aware that you've had some water damage in your house, or there was a flood or something electrical or something. In those circumstances where there's known issues, that's when I will typically recommend a seller do some further investigation, maybe not in terms of a home inspection, but really getting into the nitty-gritty of that particular issue to say, is it fixed? Was it fixed properly? And can I provide documentation to the future buyer? In terms of an overall home inspection, you know, there's a lot of companies out there that will say, hey, we do the home inspection for you so that you know all the pitfalls and the problems prior. But there are some downsides to that, which is every home inspector is different. And then you're taking away the buyer's agency to do their own home inspection. And that is a really important process for the buyer, is to be able to bring somebody in that they choose and they trust to inspect the home. And so even if you do that home inspection to begin with, you might end up having another one anyway, just to give the buyer some comfort level. So that's what I'd say on inspections. Is it's a case by case, but in general, just allow it to happen in the real estate transaction.
Perfect. And I have another one here. I'm trying to see what it says. Oh, so this is a good question, actually, because I get this a lot. Is mortgage insurance and homeowners insurance the same thing?
Oh, that is a good question. And
yeah.
No, it is not the same thing.
Yeah.
But you can probably speak to that better.
Yeah. And I actually get this a lot. So when I'm reviewing options with people, we say mortgage insurance, homeowners insurance, or they call it hazard insurance. So that's a great question. No, homeowners insurance covers the liability of your house. So it's going to cover if there's a fire, a flood, someone breaks in. It's your typical homeowners insurance, just like car insurance, where mortgage insurance is just protecting the lender from someone defaulting on the loan. So if someone defaults on the loan, then that insurance will pay them the balance of whatever is owed for that loan balance. So the mortgage insurance pretty much is protecting the lender and not the home buyer, but it's allowing you to come in with less money down. And homeowners insurance is protecting you and your house and your valuables.
Cool. Well, that's a really great distinction for everybody to know, because especially the piece about it's protecting or giving you the ability to bring less down. You
Yes.
know, I think people forget the reason and they're like, oh, I'm just paying this insurance. I don't want to. Why am I doing this? I'm getting ripped off. You know, there's so many things out there. So I think that's an important reminder.
Yeah,
So
absolutely.
awesome. Any other questions on your side that came in?
I don't.
Okay, I had one and I was just trying to look for where it went in the chat here. Oh, it was on going back to negotiations. The question was essentially like, how do I know when to walk away? You know, and it brings up a good point in terms of knowing your boundaries, being willing to compromise, but also being willing to know when to walk away from a transaction, because sometimes that has to happen and it ultimately ends up being the best case scenario for both the buyer and the seller, even though it can be really stressful and really disheartening. But in terms of knowing when to back away or when to say no and to get out of the transaction, there's no one size fits all answer, but it is really about knowing, like, what are your hopes and dreams? Like, what does it look like for you to have it all your way in real estate and whatever you're doing there? Where are you willing to compromise? What are your absolute deal breakers? And then using all of that information as well as your financial outlook and lifestyle and everything else to be able to confidently and objectively assess the situation that's in front of you, to say, okay, the party on the other side is either willing to work with us or not, or, you know, this is what we could do, and see if you're willing to compromise even more, so on and so forth. But that's where it really comes down to having that trusted advisor by your side to have those tough conversations with you and with the other parties to ensure the best case scenario for everyone. Because the one thing that I always come from the perspective of in negotiations is ultimately we are all in this together for the one common goal to get that house sold and purchased. So if everybody in the transaction can remember that and stay focused on that, it tends to work out a lot smoother. So
yeah,
that's all I've got.
Yeah, me too.
Okay, well, thanks everybody for joining us. If you want to stay on top of what's happening in real estate and lending, be sure to subscribe to our channel. Click the link below to get reminders. And as always, if you need anything at all, you can call, text, email either one of us at any time.